Hello everyone, thanks for tuning in. I'm Emily, the home bookkeeper, and on this channel I help business owners and fellow freelance bookkeepers navigate the ever-changing QuickBooks Online, while also sharing insightful videos on all things business ownership and finance. In today's video, we will be covering how you can get approved for an RV loan, the requirements for financing, and how you can start living your dream nomadic life on the road. First things first, what is an RV loan? An RV loan is a type of long-term financing used to purchase a motorhome, travel trailer, or camper. The cost of an RV can range from as little as $10,000 to more than $1 million, so most RV buyers really rely on financing. Many lenders offer RV loans for both new and used recreational vehicles. You may be able to find RV financing through an online lender, a bank, a credit union, or the RV dealership where you can purchase the vehicle. The RV itself will usually serve as collateral for the loan, just like when you purchase a car, so you'll likely won't need to put up any extra collateral to secure funding. While an RV loan is similar to an auto loan, loan terms are generally longer, and the transaction is oftentimes more complicated, like a mortgage. Most RV loans feature repayment terms that range between 1 and 15 years. However, some lenders and financial institutions may offer RV loans that stretch as long as 20 years. Depending on the amount you need to borrow, your lender may be more stringent. Similar to a home loan, your lender may want to see other documentation, such as tax returns, financial statements, and a detailed credit history. A good credit score for a car loan is around 660 or higher, but for an RV loan, you might want to aim for at least 700. The lender may also require an inspection, which can range from $150 to $1,200 depending on the RV. While an RV loan is typically specific to the purchase or refinance of a recreational vehicle, it works like any other consumer loan. A financial institution or lender provides the funds for the purchase. You pay back the money with interest over a specified time frame. RV loans are secured loans, meaning they are backed by collateral, usually the RV itself. Once you've decided on a lender, you'll complete an application and, if approved, sign an agreement outlining the terms of the loan. Brian Sharapata, Senior Manager of Credit Product Strategy for Alliant Credit Union, points out that the type of RV and trailer style can determine which lender is best for you. Not all lenders will finance every type of RV. You'll also need to let your lender know if you plan to use your RV as a primary residence. What are typical RV terms? Because RVs are more expensive than regular cars and trucks, lenders typically offer longer terms for RV loans than auto loans. Some lenders offer terms as long as 240 months or 20 years. However, borrowers who can afford higher monthly payments can find shorter terms. For example, Lightstream offers terms ranging from 24 to 84 months, while USAA offers terms as short as 12 months. If you can afford the payments under these shorter terms, you'll pay less in interest over the life of the loan. Set a budget. On the low end, you can find a towable pop-up camper for as low as $5,000. High-end RVs can cost more than $1 million. Before you start shopping, figure out what you want in an RV and what you can reasonably afford. First, consider how large you need the RV to be. A small camper is less expensive and easier to park, but it may not be the right choice if you have a larger family. Beyond the sticker price, you'll also want to ask yourself how often you plan on using your RV and where you plan on taking it, says Joe Pendergrast, Vice President of Consumer Lending at Navy Federal Credit Union. Consider mileage, safety, make, model, and drivability. Don't forget to include any reoccurring costs into your budget, such as maintenance, fuel, storage, and insurance. Repayment terms are also important when developing your budget. On average, RV loan terms range from 1 to 20 years. Make sure you're comfortable with the monthly payments before you sign up. A 10-year loan will have higher monthly payments, but you'll be able to pay the loan off faster. A 20-year loan is more affordable on a month-to-month basis, but you'll ultimately cost more in interest. Save a down payment. Most RV companies require a down payment of at least 10% of the purchase price, and many prefer 20% down. A larger down payment will help lower your monthly payments, and you will even qualify for a lower interest rate. Current RV loan interest rates start at around 4.29%, and the rate you get depends on your credit and other factors. If you have enough in savings but don't want to spend it all at once, you might consider putting a portion of the expense on a credit card, says Todd Nelson, Senior Vice President of Strategic Partnerships at Lightstream. However, be cautious of high interest rates and hidden fees if you are unable to pay off the balance in a timely manner. Check your credit score. You'll need a high score to qualify for an RV loan with the lowest interest rates. A credit score in the mid-700s or higher will likely secure the best rates. It's wise to check your credit reports with Experian, TransUnion, and Equifax, as you typically won't know in advance which report a lender will use when evaluating your loan application. You can claim a free copy of all 3 reports once every 12 months from annualcreditreport.com. You may claim 1 free report per week from each credit reporting agency until April of 2022. Compare lenders. Before you choose a loan, it's wise to compare offers from multiple lenders. You can apply with banks, credit unions, and online financing companies, or even the company you bought the RV from. Shopping around first for the best deal on financing might save you thousands of dollars over the life of your loan. With mortgage loans, for example, a Freddie Mac study found that getting 5 rate quotes helps borrowers save an average of $3,000 over the life of their loan. The savings potential on an RV could be just as significant. The terms of the loan may also vary significantly from lender to lender. Consumers should know that some lenders restrict the maximum term of their RV loans, says James Barron, former Senior Vice President of Sales and Business Development at Bank of the West. And some lenders will have a minimum loan amount that they will finance. Lenders may also restrict the type of RV loan based on use. For example, a lender may view a horse trailer with living quarters differently than an RV used as a full-time residence. Negotiate. Just as you would negotiate when buying a car, be prepared to haggle with your RV dealer. RV dealerships will expect it, and you could save yourself a nice chunk of money. Research prices on sites like RV.com, RVT.com, and RV Trader to get a handle on the current market. If you're considering dealership financing, don't be afraid to ask if a better deal is available on the loan side of the transaction as well. How to qualify for the best RV loan rates. Your rate for RV financing might be higher than the rate you could get for a car. RVs are considered luxury items, and lenders are more cautious about lending money for luxury items because they're considered expendable during a financial crisis. This is another reason why financing an RV is more expensive than financing another kind of vehicle. You will also likely have to provide your RV as collateral for the loan. Check your credit score to see what kind of rates you might receive from lenders. Lenders use credit scores, generally FICO scores, to determine your level of credit risk. They will also consider your debt-to-income ratio, which reflects your monthly debt payments divided by your monthly gross income. Most lenders will require a debt-to-income ratio to be under 40%, although some may go as high as 50%. If you want to get a variety of quotes, use lending marketplaces that let you fill out one application to get offers from several lenders. This makes it easier to see which terms you qualify for and choose the best deal for your situation. Whichever route you choose, the lender will want to know some basic information about the RV you intend to purchase. For example, you will need to provide the value, age, mileage of the RV. Buying a used camper can save money up front, but it will usually come with higher interest rates and potentially higher maintenance costs in the long run. And there you have it. Happy RVing! For more business resources, my online self-paced home bookkeeper masterclass, business supplies, gadgets, must-haves, and more, make sure to check out edjconsultinggroup.com/resources, linked below. And of course, like this video, subscribe to my channel, and turn on those bell notifications so you'll never miss an upload. And if you have any video or tutorial requests, make sure to leave them in the comments below. And for even more behind-the-scenes content of life as a home bookkeeper, feel free to follow me on Instagram @EmmaDawn and connect with me on LinkedIn. And of course, if you need any more assistance, personal financial coaching, or bookkeeping and payroll management, feel free to email or visit edjconsultinggroup.com. My firm is fully inclusive and ready to help you along wherever you may be in your entrepreneurship or personal wealth building journey.